So in today's video, I'll be showing you on how to use moving average, introduction to moving average, differences, and when best to use them. Okay, so before we start the video, I'll advise you subscribe for more related content like this, and also if you want to join us, link is in description. Okay, so let's head on to the video. So first of all, I'm sure almost everyone know how to set or add moving average on their chart. Okay, you click on this F symbol, you press add to main chart. When you click add, you see moving average. Okay, so first of all, we have four types of moving average on the MT5, but I don't explain what I've not used or what I don't use. Okay, so I'll only be explaining what I've used, which is the simple, exponential, and weighted moving average, which is also called linear weight moving average. Okay, so there are similarities and there are difference between the exponential and simple moving average. Okay, the similarities is that they both move in change to price. Okay, but the difference is that what I notice in both of them, as I use them, what I notice is that the exponential moving average tend to move faster or change direction earlier than the simple moving average. Okay, so that is true. So that you have in mind that if you're a short-term trader, okay, if you're a short-term trader, you need a moving average that responds to price faster. Okay, if you're a short-term trader and you're using a slow moving average, you will not be able to catch early move, okay, in market. Okay, so you need a short-term moving average. That's when you use exponential moving averages. Okay, so I want you guys to know that exponential move faster or earlier, sorry, than simple moving average. Okay, so if you're a day trader, if you're a day trader, you need exponential moving average. Okay, but if you are a swing trader, use simple moving average. Okay, I see people making this mistake. Okay, and I want you guys to avoid that. Also, people don't know the type of trader they are. Okay, there are different type of traders all over. They are the one that we have the ones who catch spikes, the one who trade against spikes, the swing traders, day traders. Okay, so try to know which type of trader you are, so that and stick to that one. Okay, don't say that okay because my friend is doing this, let me to do this, because and you tend to lose more in market. So know the type of trader you are, and also know the type of indicators that are best used for the type of trading you are doing. Okay, so for day trading, I advise exponential moving averages you use. Okay, so if you're a short term day trader, I expect you use 10 exponential moving average. This I've not used this. Okay, I've not used this, but I see people using this moving average. I don't know what they use this for, because I'm not a short term day trader. I'm not a short term trader actually. I'm actually either medium or long term trading. That's what I do. So I don't really know how short-term traders use this, or if I can find out, I'll make a video on that. But if you're a short-term trader, I advise you stick to EMA 10. I try to know more on moving average 10. Okay, or find which strategy. You don't just depend on others. Try to develop your own strategy on your own and see if it work best for you. Okay, so for medium day traders, you add, sorry I didn't show you guys, you add 21 moving average. Okay, this is what you use if you're a medium day trader. Okay, you can use this one. For me, this exponential moving average 21 is the most accurate for me. Okay, for me this is the most accurate of all exponential moving average for day trading. Okay, so as you can see that with this, you can actually correspond it with your strategy. Okay, you don't use moving average alone. I see people saying, okay, when price cross this moving average, okay, you sell. Okay, this is wrong. Don't use it alone. You use moving average to just either see if the trade you want to enter corresponds, okay, with what market is doing. So this moving average serve as, let's say, confirming indicator. Okay, confirmation. Okay, so for long term day traders, you use the 50 exponential moving average. Okay, this 50 exponential moving average is used to identify long-term direction. Okay, if you're a day trader, don't use the 200 moving average for know the direction of the trend. Okay, that's for swing traders. Okay, if you're a day trader, use it for identifying longer term direction. Okay, that's what you use the 50 moving average for. And I assure you, if you're a day trader, all what I've said, it will be profitable to you. Okay, so that was for day traders. Now for swing traders, okay, the best moving average you should use for swing traders, that's what I'll be saying henceforth. Okay, so first of all, for those who don't know who swing traders are traders that trade on the 4 hour time frame upward. Okay, they don't trade on, let's say, 30 minutes, 15 minutes, no, or 1 minute, no. Swing traders are traders that trade for, they want to try and analyze the upper end of the market. Okay, so they start from 4 hour time frame upward. Okay, 4 hours daily, that's what they use. And swing traders, they hold trend for longer time. Okay, that's mainly why they call them swing trader, because you cannot just you cannot just open a trade here and say that, okay, price moved, okay, 10 pips, I say want to close, and you can say a swing trader. No, you can open trade here and let it run for hours, and if you see price, you can set your TP, or if you see price behaving somehow, you can close it. Okay, so swing traders hold trades for longer time. And if you're a swing trader and I see you using the exponential moving average, I advise you remove from your chart. Okay, all swing traders should use simple moving average. Okay, simple moving average is the best, or what I've observed is the best for swing traders. Okay, so first of all, if you're a short-term swing trader, I advise you use simple moving average 21. Okay, for short-term swing traders. Okay, if you're a short-term swing trader, you know, said all swing traders they trade for long. Okay, they all trade for long, but people also differ. Okay, in the way they trade. There's some people that the highest they can hold is, let's say, 1 hour. Sorry, this is a 4 hour chart. Highest, let's say, 4 hours they close. So if you are the type of trader that don't trade for at least a whole day, you cannot leave a trade for a whole day, or let's say 8 hours, then use this type of simple moving average to confirm your trades or confirm your entry, if your entry is right or not. Okay, I know if people want to know, like, when should I use this, which strategy can I use this with, it will be, I'll be dropping a video on that. Okay, in my next, or let's say my second video I'll be uploading. Okay, I'll be showing you how to use this moving average to confirm your trades. Okay, but for now, I'm just giving introduction, okay, on which type of moving average you should use. Okay, so if you are an average or standard term swing trader, I advise you use the 50 simple moving average. So this 50 moving average, you use it to ride trends. Okay, So let's say you've analyzed before that from here um it will you want to enter for a sell here. Let's say you analyze, use Fibonacci, support and resistance trend line, and you say that okay, from here, okay, let me show you an example now. Let's just draw a rough trend line. Let's just say that okay, from that spot, it's put that okay, from here, price will make a sell. Okay, let's say from here is for that okay, from here, price will make a sell, and you see the moving average confirming that okay, is actually price went under it, and at this spot again you confirm that it's going to make a sell. You can use this moving average to confirm or write trends, okay, in market. So if you enter here, you keep leaving the trade running, okay, until you see price crossing this moving average. Okay, if you see price cross it a bit and retrace, leave it. Okay, it's confirming this moving average, just confirming that this is a nice downtrend. Okay, and you can see the move. So or if you don't understand, don't worry, in my next video I'll be explaining strategies on when to use this moving average perfectly. But for now, let's just focus on the introduction so that when I start the strategy video you won't get confused. Okay, so for those that use moving average as support and resistance, okay, on the higher time frame, I advise that you use 100 simple moving average. Okay, if you want to use this as support, and if you want to use, if you're looking for this for all traders, either swing traders or day traders, if you need a moving average for support and resistance, okay, there are different types of support and resistance. You can use rectangle, plot it on your chart as support and resistance. You can use trend line as support and resistance. You can use basic supply and demand zone for support and resistance. And what people don't know is that you can also use moving averages for support and resistance. So you can see that price came out, broke this, reversed, confirming this resistance, support turning to resistance, and you can see it bounced on the moving average, and you can see the sell. So you can also use, so you can use 100 simple moving average for support and resistance. But for me, if I'm to use moving average for support and resistance, I use daily time frame. Okay, it's daily time frame I see that work best for me. But sometimes I use 4 hour time frame. I never use it on 1 hour chart. I never ever use it on 1 hour chart. 4 hour time frame higher, you can use moving average to confirm support turning to resistance. Okay, let me show you in case you are confused. This is a zone. Okay, let's say this is a supply demand zone. Now you can see this was a support until price broke it. They came back to retest it, forming a support resistance zone. You can see price now reacting to this touching of the moving average, and you can see the long-term sell. So you can use moving average for support and resistance. Moving average 100 for support and resistance zone. Okay, you can see anytime price reacts to this line, you can see a reaction take place. A reaction usually take place. Okay, so as I said, never use moving average alone. Let's say you plot Fibonacci, golden ratio stuff, and you can see it collides with this. You can confirm with your moving average, simple moving average 100, that okay, this trade is a sell. So that's when you use your simple moving average 100. Okay, but if you want to know the direction of trend for moving average, I advise you use 200 moving averages. Okay, moving average, sorry. This 200 moving average tend to tell you that okay, price is in a uptrend or downtrend, and it's said that okay, if you are in let's say you entered here for a buy, let's say here, and you can see price reacting, like going against your trade. No, this is too far. Let's say you entered here and you can see price coming down. Okay, see that? Okay, and you see price retesting, it now later go up. You say, okay, my trade is still secured. As you see it's going up, sorry for cleaning that, it entered there. As you see it's going up, this moving average is trying to tell you that okay, market is in an uptrend, your trade is still secured, and you close at maybe your TP. Let's say your TP was here, you can close, because no matter how price go up, it will surely come down. And that's a mistake traders make. Okay, when you're in big when you're in big profit, you don't tend to maybe lock your profit. You say that okay, let it run more. Imagine running for 2 days and you're saying, let it run more. That's wrong. Okay, so if you want to, or before you enter a trade, let's say you want to know the trend of the market, that when you use the 200 moving average, simple moving average, to know the overall trend, okay, of a market. So this currently volatility 10 is currently in a downtrend. We don't know, it might try to bounce on this support. Okay, so for now it's in a downtrend, but if it breaks the support, the moving average will confirm for us that this is still a downtrend, so you can leave trades open for a sell. Okay, so I think this is all for this video. And people also use moving average for golden cross. Okay, people know it as golden cross stuff, but me, I don't. I think I've make video on that, but I should be honest, I don't use the strategy. I don't use golden cross strategy. Let's say golden cross strategies between simple moving average 50 and 200. Okay, let me change the color of this. So basically, when there's a cross between the two moving average, you enter a trade. Okay, so I think this is what this strategy is about, but I don't use it because they are, I think this is a win, but there are many losses. This is a win, loss, win. So this is a 60-40 trade. You win 60% of your trade, you lose 40%. For every, let's say for every 20 trade or 20 position you open, you win 60% of it and you lose 40% of it. So basically, I think this is a, I can't say this is a good strategy, but I mean people use it and people profit from it. So I would advise, if you want to use this golden cross strategy, I would advise you don't use it alone, use it with other indicators you've learned or you use, okay, to confirm your trade. So this basic golden cross is basically between moving average 250. Okay, so I think this is all for now. In my next video, I'll be explaining when or how to use the moving average to enter trade, to exit trade, the best strategy for it, and all other stuff you need to learn. Okay, so I'll be looking forward to the next video with you guys.